Young Turks, India's longest-running show on startups and entrepreneurship. I'm Shireen Bhan. Now, this week on the show, we bring you part 2 of our special series, The Unicorn Health Check, a show that delves deeper into what's working and what's not for India's billion-dollar startups. Today, we explore the real and the estimated market that India is targeting. Over $80 billion have been invested in 102 unicorns with a combined valuation of over $350 billion, many of which are valued at 10 times their global peers. However, most unicorns spend between ₹1.50 to 2 rupees to earn a single rupee of revenue, prioritizing growth over profit for now. But what is the big prize that India's billion-dollar startups are going after? Let me show you. Now, India has the world's second largest internet user base with about 780 million users today. That's twice as many as the US. And by 2030, it's estimated that India is expected to surpass China and have the most internet users globally with over 1 billion users. Now, can you imagine India's digital bazaar by 2030? Over 1 billion Indians spending an estimated average 7 hours on the internet every single day. That's 2 hours more than the Chinese, and that's the India consumer story that unicorns are supposedly going after. However, let's take a look at where the market stands as of today. The overall consumer market is about $1 trillion, serving a population of 1.4 billion people. Now, this is the business that most B2C unicorns consider. However, and here's a closer look at the numbers that are available with us, the market is much smaller and the obtainable market is even more so. The same applies to B2B unicorns going after 65 million MSMEs. The reality is less than 1 million of these small businesses are active or repeat customers. Now, while the opportunity is immense, the valuations for the most part seem far removed from reality. And that brings us to the reality of the actual users. As of 2022, 500 million Indians are not active transactors, meaning they do not engage in online transactions. Only about 300 to 325 million people actually transact online, but these users tend to be opportunistic with low loyalty. The more mature users who are frequent online shoppers and spend about half of their wallet online are only about 40 to 45 million. It is projected that this number could increase to 150 million by 2030. But even then, it would still be less than 20% of the real market. So let's pause here to ask the question, how deep and wide is India's digital bazaar? Let me show you what our unicorns are actually catering to. And let's start with Zomato. Of India's 40 to 45 million frequent internet users, just about 17 million make up Zomato's monthly active users. Let's switch to Nykaa, company that's targeting 180 to 190 million online shopper base. It gets regular orders from just about 24 million active buyers. This gives us a sense of the real market versus the opportunity. Now let's talk about Byju's. It has the largest group of school-going kids in the world as its target market, 350 million. So while it's impressively registered half of that population, guess how many are actually paying customers? Only 7.5 million pay any money at all to Byju's. For Cars24, which operates in India's fragmented used car market that sold 4.4 million cars, in FY22, Cars24 had less than 1% share. The scope of the market is also visible when we look at the Indian stock market. Now, in a nation of 140 crore people, just about 8 to 9 crore hold a demat account. And India's top broker, Zerodha, has a usership of 1 crore. The picture's not very different from the enterprise side either. Of the 65 million micro, small and medium businesses in India, off-businesses' client base stands at about 0.7 million. Which brings me to the big question that we are asking. Are founders and investors overestimating growth prospects and the target market size? How long will it take for startup revenues to start justifying the valuations that they command? And finally, will the next set of startup IPOs get real? And joining me now to help answer these questions and more, Nithin Kamath, the founder and CEO of Zerodha, and Rahul Taneja, partner at Lightspeed India Partners. Nithin, Rahul, many thanks for joining us here on CNBC-TV18. Nithin, I want to start by asking you, before we talk about the prescription, let's get the diagnosis right. And I want to understand from your perspective, what do you see as the big problem, the big malaise that India's startup ecosystem is facing today?
Yeah, I think it's hard to generate revenue from from a large group of Indians. I think to be able to generate revenue, I can't see how you can really generate revenue from the top 5 crore Indians. It's very hard to figure, and I think people are struggling there. So like even in broking, I think I somehow feel that we've kind of hit a plateau. Because the new user growth has dropped, the existing existing users aren't really adding more as such. So I think the big challenge is that while India is a large country, we're still a poor country, and the real problem to solve in this country is to kind of get rich inclusively, get a lot more Indians to a position where they can actually spend money online. I think we're still some time away from that happening.
So, if I were to understand what you're saying, and I know that this is a point that you've been reiterating for a while, and it doesn't seem like you've changed your perspective on this, Nithin, you're basically saying that the monetizable opportunity has been grossly overestimated.
Yeah, many times over. So.
Many times over. That's as real as it gets. Rahul Taneja, let's talk about this. Yes, India is a large market. Yes, India is a growing market. Internet users are getting added on, month on month. But how many of those users who are being added on have paying capacity, have spending power? To Nithin Kamath's point, that there has been a gross overestimation, in his words, many times over, of the potential, the monetizing potential of this market, and hence it's out of whack when we talk about estimations, valuations, and the kind of growth prospects that both the VC community as well as the unicorn ecosystem is expecting or anticipating.
Yeah, thanks, Shireen. Thanks for having me over. I couldn't agree more. I think, to give you an example, every time somebody talks about, beauty as a category, for example, everyone looks at Unilever and says, okay, this is the number of towns, the number of consumers they're serving. But people forget it took many decades over in order to create reach and the right product for these consumers, right? So I think there is some amount of overestimation. And beyond that, I think people think that, capital can solve for creation of suitable products or propositions that may attract these consumers, right? But that is not very obvious to start off with, right? So most definitely, yes, I think the amount of paying population we have, as Nithin said, is limited. The important point is people first need to start off from who their customer is going to be and is there value to be delivered to that customer. Everything else follows from that. And I think the smarter guys zero in on that very quickly, and that is where they prosper.
Rahul, the question of who your customer is, does your customer have paying capacity, and so on and so forth, I would imagine that these ought to have been questions that have been asked by VCs of the unicorns that they've invested in, and answered suitably and appropriately by those startup founders as well. There seems to have been a disconnect. How do you explain that, Rahul? Was it because of an era of easy money where you didn't really have to worry about where the next check was coming from, or even the size of the checks that were coming your way? Did that just get the ecosystem to gloss over addressing some of these crucial existential issues?
Yeah, I think great question. I think the question is about what do you prioritize, right? First, do you prioritize understanding your customer and developing a proposition that is attractive to them, or do you prioritize scaling over first understanding whether what you have is working or not? And in an era of cheap capital, a lot of people, including the investment community, prioritize scale over first solving for that problem. And that really is at the heart of the problems that many of these companies face.
Yeah, that's just one of the problems. But Nithin, I want to come back to you and to pick up on what Rahul was talking about. And this takes me back to the conversation that I had with the World Bank president just 24 hours ago, lamenting about what this era of zero interest rates across the world has actually done and how that hasn't allowed for the creative destruction that otherwise we would have seen, how it's led to a plethora of zombie companies across the world. And now as we move from an environment of higher interest rates, perhaps for longer, what would it mean in the specific context, for instance, of the Indian startup ecosystem as well, Nithin?
No, I mean, I think this is, when I look back to the last 4 or 5 years, I mean, this is something that sticks out, as in we've ended up creating so many non-resilient businesses that can potentially be sitting ducks if if this winter lasts for 2-3 years, and it's not good for the ecosystem, it's not good for the country, it's not good for anyone, right? As in, I mean, also, see, the other angle in this, right, is that people talk about tax rationalization, so one of the things is that today if you had to take money out of a company trying to profit through dividends versus through capital gains, the tax differential is so much. I mean, you can, capital gains short, is 20%. If you want to take money through dividend, you end up paying 60-70%. So what I'm saying is that, even the investors today, I get to sit on a few boards, right? I mean, I don't think investors today really look for profitability, right? I mean, they're looking at creating max valuations, right? Because max valuations, exiting through capital gains is really a very tax efficient way to be able to make money versus trying to take profits out, paying, whatever, 2.5 times more taxes. So it probably also, this whole cheap capital is also kind of, I think wired everyone to think of business as valuations and not in terms of, business in terms of, like profitability, right? So, and these winters will come, right? I mean, I don't know how this will last, but yeah, but there's a problem. There's a problem, if I think we got lucky as India that we raised a lot of money, in the last 1-2 years. So I think, a lot of these startups have a lot of runway. At least, they have runway till mid next year, I think. So I think the real trouble would be like if this winter doesn't come by then, we probably will have an issue in the of sorts.
When you say that there will be an issue, I want you to explain to me, what that could potentially mean. And you're saying that many, because they raised ahead of time, do have a runway up until the middle of next year. But what could this issue potentially look like, Nithin Kamath? You're saying that there are many who could, in your words, be sitting ducks who may not last if we do see this funding winter continue. Quantify for me what this issue could potentially look like.
Yeah, no, see, the thing is, if if you're not able to raise money and you're running out of money, I mean, the issue is you can't survive. That's really the issue. As in, and the thing is, it's very hard. If you haven't already built a business where a customer is paying for you, it's very hard to get a customer suddenly. If you stop all discounts, stop all freebies, and suddenly expect that a customer will somehow turn up and pay for you for something he wasn't paying. That behavior change, we've seen it at Zerodha as well. Reducing costs is like, everyone will love you for it, but to increase, even like, even if you have to increase by 1 rupees, the fire you get is just incredible. So India is really hard when it comes to to the ability to be able to make money from the masses. So I mean, it is the issue is that if the winter doesn't end fast, I mean, I think there will be a lot of companies which will be forced to merge with others or forced to shut down. So.
Yeah, Rahul, and that's an important point that I want you to come in on. One is on what companies can actually do as far as costs are concerned, and we're seeing that across the board here in India as well. Startups laying off people, shutting down businesses that are now non-core and so on and so forth. But on the other aspect of being able to raise revenue, be able to monetize customers, how hard is that going to be? I mean, we haven't even seen how the Twitters and the Metas of the world are going to be able to get customers to pay for the blue ticks and so on and so forth. But to get customers in India who are already pretty price and value conscious to start to pay for services that so far they didn't have to. I mean, how easy is this pivot going to be? And will everybody be able to make it?
I think of this like muscle building, right? Muscle building doesn't happen overnight. If as a founder, your muscle was built around the vocabulary of let's say GMV, then for you to start building your muscle around margins or a margin pool, and how much of that you can extract, logically speaking from your customer, that muscle building is, I think, at the core of this change, right? And it doesn't come easy. Cutting down on costs give you a slightly longer runway in order to build that muscle. But unless you're building that muscle, saving costs will only take you so